invitation for you, Chris. Welcome back to F.A.C.E.
Hey, Dale, and
Appreciate
thank you,
you
Blake.
coming.
Hey, buddy.
Yep.
Yes.
Appreciate you being here. What's top of mind? A lot of things going on. You want to talk about what you're doing for traders, or you want to talk about what you're seeing in the markets? Your call.
Let's go for what's going on in the markets, because that is we're busy in it right now, right?
Okay.
Shall I
So why
take the
don't
screen?
why don't you put? Yep.
All right.
You're very active on Twitter, and it seems like you're trying to educate some people on Twitter.
I do what I can. I do
Yeah.
what I can.
Good luck. So all right, so here we are, NASDAQ, late stage parabolic move.
You called it. You called it. First off, well, thanks everybody. It's always a pleasure to chat with you, Dale, and the whole community here.
Good to have you.
Yeah, I love my quarterly visit. So what we to give a quick back story or idea of how I like to do things is I like to look at, okay, what is the big picture? What is the easy pitch? What's like if I was to wake up and had to kind of like guess what was going on and then go to sleep for the next few months with an easy way of like, I'm probably not going to lose too much money. And I have a pretty good opportunity to make money. That's how I structure everything.
Oh,
and
yeah,
so that takes about 70 to 90% of all other opportunities. I don't even have to think about those things. I don't have to think about an emergency rate cut. Usually, unlike, unless there's a banking situation, like you mentioned, I don't have to think about a lot of different environments right now that just don't matter. And I can worry about what's in front of me. And so I use this little tool down at the bottom, and it's called the SQN tool. You can get it on TradingView for free. Just type in SQN and it should show up.
Measuring breadth,
so
volume.
It measures the percent change averaged of the last 100 days. So it basically, the red shows you it's bearish, it's going down. And as it gets taller or smaller, the volatility is rising, or in the sense of going down, its volatility is rising, but it's in a directional move down. So closer it is to zero, the low volatility it is. And what we have here in blue is NASDAQ is the bull volatile regime. I call it the bull volatile. Just means that we're getting big percent change days average over the last 100 days. And you don't need to be, usually you don't need to be too smart to see that big parabolic move here. And the only thing that it's useful is that it is there's a couple of environments that come into play with it. You get a major market top, or it just goes. But what would tell
you at the top if the blue dropped down to zero, or would the move already be well underway?
So that's a very lagging indicator that I like it. So it just tells me the environment of we're in, and I'm not actually too interested in NASDAQ at the moment, other than like, yes, we could be in that new AI boom. Yes, all these things could be happening. It's still kind of
the Russell, right?
Well, I just want to compare it against the NASDAQ, all the other ones, to see, where we are.
Is that where we're going, to the Russell?
We'll go to take a look at the Russell, the S&P, the Dow. We can look at metals, any of those.
But I want the Russell, it's been due for a long time. And, I've seen counts that even if we had a washout in the market, that most of it's out of the IWM. And we can see marginal new lows there, but most of, they've taken all of the air out of it. And then on the rallies in the last few weeks, they've been the stars, haven't they?
Exactly right. That's exactly the point. So your point 5 or 10 minutes ago on the banks is one of the things that keeps the Russell from really getting going, because of their exposure to the banks. But and it's probably the best thing. Let me just one more clarification what we see. So this volume profile, I anchored it to the COVID low, since that was pretty much when everything changed, right? The
except the regional
February.
banks.
I just mean trillions
Yeah.
of dollars was thrown into the market, and
Yeah.
everything is, as far as if you look at a chart from like 2018 and you try to compare it to 2022, you're just like, what? That's completely different. So that's the only reason I anchored it to that point, so that we could see what the world has looked like since here and how relevant everything is. And you can see that 70% of the volume has in NASDAQ. We're at the very top of that range. So for me, yes, NASDAQ is cool. Maybe have some deep out of the money calls on Nvidia or things like that to play the like maybe game. But yeah, I'll definitely go to Russell next. And it's exactly the opposite, right? We're at the value area low. So 70% of the volume since COVID has happened where we're at right now. And we've just got liftoff, as you said, a couple of weeks ago. And that happened right here, right? So we started to get these a little bit higher low, which we'd been getting for feels like a decade.
Yeah.
And then it just
range.
Huge. And 200 point range. And within, let's call it was about 2 weeks, we got up to that level. And this is an anchored VWAP. So everything is just kind of colliding. We're in this big congestion on everything. And if we go back down into our system quality number, this thing, we can see that it's just flat. There's not much happening. And so yeah, the Russell has a lot of opportunity to get to the top, but just because the opportunity is there doesn't mean it's going to get there. We had that liftoff and in price, and it's just kind of stopped right here. So we have to see, what comes of it. And in comparison, the easy trade here that I see is this updated.
S&P.
Yep. So the S&P is just, we're in Yep. We're in this little green area. So this is the place I want to be, where it's kind of obvious here that this is where you saw Russell was just flat, right? It was kind of flat on that number line area. And it was just banging up against everything that was in resistance. S&P, on the other hand, is just kind of has this drift. Yeah, there's plenty of other.
Why is it green, Chris, instead of blue?
So blue is the top end of the range, and that's where things. So I call it bull volatile, bull quiet, neutral, bear quiet, and bear volatile.
What do you call green? I call
green
it money.
Yes, that's a better way to do it. I should change it.
Go ahead.
I should change. No, it's easy. It could be changed to easy. It could be, and like one of the easiest characteristics to understand when you're in that environment is everybody starts complaining about buy the dip, and that it's working. Like the easiest trade and the most fun environment. If you say, hey, do you just want to be right and not really care if everybody thinks that you're wrong, and make a lot of money and do it really simply for the next couple of months? Does that sound enjoyable to you? Cool. This is what we're looking for. Let's look for this and let's just kind of get in it. And that's the environment we have on the S&P. I'm not saying the NASDAQ is done, because I'm not the sort of guy who would try to short the NASDAQ. I like money.
But you have expectations of 4,700 would be high, a high area. It'd probably be blue up there. The green.
It depends on the speed that it gets there. That's really the
velocity too. Wow, it measures everything.
Yeah, the rate of change that it gets there. So you can get, if we went and looked at like COVID, it went from blue to red. It's hard to see, but we know that for those of us that were trading COVID, that was quick. And I mean, we were in that bull volatile, really toppy environment for a while, and then it just went. And the reason that's useful is not that just because we're up there doesn't mean that we're going to go down at all. There's many instances in history that nothing happened, and we just, as they say, you can just base. That's one way to absorb that price level. But when you move somewhere so fast, so quick, you just have easy fickle money, or like fickle money that just made a bunch of money, and so they're waiting for any reason to start selling. And, of course, everybody in Russell is just waiting to put that short NASDAQ long Russell trade on, which, we can call the widowmaker right now.
Has been.
Definitely. And, you know, if we go back to that period where, what was it? Here was when this 23rd, 24th, 20, right in here, Friday, right after Russell took off, this guy, you know, NASDAQ started to relax a little bit, and then it didn't. Yeah. And so I think there's a lot of eyes on Russell at the moment. Everybody's really kind of just waiting for Russell to get going. And we all know what happens when everybody's focused on the easiest
trade. So you
trade.
mainly focus on stock indices? Is that what you do when you're working with your people that are subscribers?
We spend a lot on what's working. So we want to be in the right environment that's there. On the currency side, we're not as focused anymore.
Are you saying, Chris, the easy trade is buy any pullback in the S&P or NASDAQ? Yeah. More S&P because it hasn't been as exploited.
Yeah, I think that the easy trade is going to be there. How you structure it and how you size it and where your stops are is always the toughest part. But for me, yeah, I'm looking for.
Where would that scenario be wrong?
The scenario wrong is probably, and it's just hard to imagine that, but that's what we do, right?
You have to imagine it. Back under 42.
I don't know if I have a hard line number. It would probably, for me, it would be more important to see the rate of change and the reaction to that rate of change, how fast it moved down.
So if it moved back to yellow, and definitely orange, that's how you could tell your strategy from being long around here isn't going to work.
Yeah. And then probably the more important thing that I would be looking at is I like to look at the 10-day. Let me just throw this one up here real quick. This is the 10-week average of the NYSE advancing issues. Yeah. And so what I like to see is if I'm in this area in here down below 1200, this is just a simple 10-period moving average on the ADV symbol, if anybody's interested. And you just turn off the price. Like, that's messy. But I want to see the 10-week average. And typically when we get a move below down in that 1200 area, that's where a major market bottom has happened for me. And I am either expecting an imminent crash to capitulate the bottom or just things to turn. And so the last time we had that was in October of 2022 and March of 2020 and December of 2018. And so we can go back into these big periods of time. Remember the flash crash and US debt downgrade. And even if we look at global financial crisis, it never got as low as these areas. So, and then ideally what I want to see is I just want to see it hang out in the middle here.
Okay. All right.
So for me, that's what I'm looking at. I'll leave with one last idea here, and that was gold. And gold, for everybody was just really excited about gold, and you see where it ended. Everybody except Dale, smart. See, yeah, because we're in an area where it makes a lot of sense, right? Everybody who was super excited, everybody's always excited up here. We got our little ticks of blue up in there. So that just says, okay, we're at the top of that range and we're getting blue. Okay, that's likely where it's either going to have to do something spectacular, which some of us remember gold doing in the past. But most likely what's going to happen is it's not going to do something spectacular and it's going to continue to break everybody's heart. And then do
you have a buy value area in gold?
Well, I want to see how it reacts at the Fibonacci levels, and it held and it stopped at the most recent, at least from the March level. It held at that area and then broke. But that doesn't mean anything to me that it broke. It just means, okay, I want to see now if it continues and goes, then I kind of sit back and say maybe let's take a look at
fib level 1850. I see the in turquoise on the side.
So that would be the 100% retracement from that move, but also we would look at where that is in relationship to the big move, which is the 61.8 from the November lows.
Okay.
Right. So if I'm a buyer in there, I want to see first how this reaction is, this March to May. I want to see just because it broke today, just because we're down today, we just had news. It's pre-market, like this could end up here today. But I want to see the reaction to this level, not so much that it touches the level or that it hangs out at that level, but I want to see some definitive reaction. And if we close below that level, that might be definitive to say, let's just stay away until we get.
So we're getting a reversal during this interview.
Yeah.
Because I'm not looking at my screen because we were down about 10-15 last night. Okay.
Yeah, we're down. We're at what are we at? 1944 right now. Yeah, 1945, and it looks like it's starting to move.
Okay.
Yeah, there you go.
All right. Yeah. So
that's definitely people who thought 61.8 was going to be that super important level all sold. They're off the books now, right? Now they're going to have to chase if this thing goes, and that's why I don't focus on the level itself, but the reaction to that level.
Okay. I just missed a lot of trades doing interviews.
Sorry, let's get off the phone. Let's go.
No, I know it's just part of part of the gig, man. So
yeah.
What's the best way to get a hold of you? And I think that you are trying to prepare people. A lot of people are going to prop trading houses, and you're trying to prepare them for passing an assessment. Why don't you give us, before you go, one of the most important lessons you give people before they're going into an assessment?
The most important lesson in an assessment is don't do it. Well, I'll give you two. Don't do it unless you are prepared to take about a 1 to 2, 3 months to pass the assessment.
Time is part of it.
Yeah, it's not a 3-day win and you're going to be a billionaire. Take time, right. And then have a system that has a positive expectancy that if you play out over time will fit within the parameters, so that even if you lose 10 to 20 in a row, you're not going to lose your account, lose the assessment, and more importantly, don't lose the funded account. That's where it really hurts.
Okay, so you're a big system trader believer. Discretionary trading is just too inconsistent.
It's only, in my view, the route should be you're going to be an idiot as a discretionary trader initially. Get into systems so that you can build a framework and do good, and you may never have to leave systems trading, but eventually you'll add some discretion on top of that, and that's where it really works. But you got to keep your position sizing and risk management in place, and you learn that in the systematic side of your trading career.
Learn from your system. Okay.
Yeah.
Great tip. So don't rush and learn. You get to learn your system. All right. All right. Great advice, Chris.
All right. Thank you, Dale.
Right,
free. Well, let me pump the free newsletter. I write a newsletter every day.
You could show it.
Sure. PollinateTrading.com is the site. It's free to sign up for the newsletter. And I write every day. And especially when something's really big and exciting, I'll spend a lot more time writing about it. But a day like yesterday, everybody knew the news, so I didn't really need to come in and say, hey guys,
he's prolific. He's really, he tweets prolifically, he writes prolifically. Chris is living and breathing it. So you can learn from a guy that's been there, and Chris has been there. Right?
And I'm
Dale's teeth kicked out. You've had your teeth kicked out a few times, right?
I've been doing this for 24 years, so I'm on my 20th set of dentures, probably.
Oh well, I have implants. So anyway, buddy, it was great catching up with you. Stay cool. Likewise. This summer. Go up to the rim. Get out of there. Scottsdale.
We're out of here tomorrow morning.
Oh yeah, where are you going?
Yeah, we're going up there. We're going up to Pine.
Oh, Pine Top?
No, Pine, the little small town of Pine, just outside Payson.
Oh, God. Yeah, I love it up there. All right. Chris Dover, everyone. And you can follow him at Chris DeMacro. And go to his website, sign up for his newsletter, and maybe you found a mentor. Say hello to Chris. All right, buddy. So good hunting until I talk to you again. Enjoy your summer. And we're all the whole team, and everyone here is rooting for you and the people you work with.
I appreciate you, sir.
All right, buddy. Thanks very
Have a good
much.
day.
That's a wrap, everyone, for F.A.C.E. We'll see you tomorrow, TGIF, and you could join the team in 22 minutes for the morning edge. Don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.